We bring on board Ruchit Jain as well from Motilal Oswal Financial Services. Ruchit, what do you make of the kind of day of trade that we're seeing? I mean, the pain just doesn't seem to be, doesn't seem to be coming to an end in any fashion. We continue to be exposed to downsides with regard to the index.
Yeah, hi, very good afternoon.
Very good
I think
afternoon.
markets are clearly reacting to the data points itself, which we have seen since last few days, whether it be war-related news, FIS selling, and the USD INR, which has depreciated sharply. So, until we see any kind of reversals in this things, or in these factors, which have led to this entire market downtrend, I think markets won't be in a hurry to make any kind of bottom or see any kind of trend reversal very soon. But the only thing that the green light that I can see for the markets is on a bit mid to long term charts. 22,000 to 21,700 is a very strong support zone for the markets. There lies the 200 EMA on the weekly charts and the previous swing lows. And when the markets are approaching these support zones, the RSI setups are quite oversold. So this combination, when the index approaches oversold, or index approaches the support zone along with oversold RSI, that usually leads to good short-term bottom getting formed. But no, as of now, I think that range is still far. That is 22,000 to 21,700. So I think until we see any kind of reversal in the data points, we should continue to stay a bit cautious. Any traders who want to take some contra trades or take some risk of going long on the markets, 22,000 to 21,700 should be the range where some contra trades can be taken there.
And from 21,700, should we get to that level, Ruchit? Does it seem like it could open significant more downside from those levels as well?
So I think as of now, I believe that we would see a bounce back from those levels. But yes, if that levels gets breached, then we will access the kind of market breadth if weakens from current from further from current what we are watching. So these are typical scenarios of panic selling that we see, what we have seen in today's trading session. So I think 21,700 should be good enough to hold on for now. If not a trend reversal, at least a decent pullback move could be expected.
Interesting. And does it seem like, for now at least, banks and financials at large are the one which are looking like the weakest link?
Yes, I think the leadership in this down move over last few days have been taken by the banking and then financial space itself. So no signs of trend reversal. And even if you see the entire corrective phase of last 3 weeks, then every pullback move in the Nifty Bank Index lasts for 2 or 3 trading sessions. It forms a lower top and again witness a continuation of the downtrend. So that lower top, lower bottom structure still continues to be there in the banking and the NBFC space. Now that support which we're talking about in Nifty, which comes around 22,000 to 21,700 zone. Similarly, 200 weeks EMA support for Bank Nifty is coming around 48,800. So still a bit far from current levels. So I think some more pain is still left in the banking space.
Interesting. Ruchit, if I can quickly get your top stock calls.
So from a trading perspective, we are recommending to go short on Bandhan Bank at current levels. We have seen, we already spoke about the sector, and within the sector there has been a good underperformance, price volume based selling happening in Bandhan Bank. So we think that the stock would breach its recent swing lows as well. So one can go short on Bandhan Bank April futures with stop loss about 147, expecting target somewhere around 133, 134. For contra trades, pharma is one space which we believe that the downside should be limited from here on. We are already witnessing that when in this entire down move over last 1.5 weeks, we are not witnessing that kind of selling pressure in the pharma names. So within that entire pharma basket, Glenmark Pharma is where the technical structure looks quite positive. The 50 DMA is acting as a good support on corrections. We are not witnessing any kind of volume-based selling. So relative outperformance, I would say, can be seen in Glenmark Pharma. So from current levels, one can go long over there with stop loss below 2030, expecting up move towards 2300 over next 2 to 3 weeks.
Interesting. Okay, let's just...
Welcome back, and we're joined by Sudeep Bandyopadhyay, market expert, joining us this afternoon to give us a sense of how he's viewing markets. Sudeep, what to do in a market like this?
Well, Harsh, it's an extremely difficult question, but as far as retail investors are concerned, we are telling them to be extremely cautious. Don't rush into the market. Of course, there are opportunities emerging for value buying from a long-term perspective. But even if you have cash, I think it's always better to buy in small installments instead of buying at one shot. We don't know whether we have seen the worst of the fall yet. Uncertainties on geopolitical scenario continues to linger, and there may be further escalation the way things are poised at this stage. So extreme caution is the word from an investor's point of view. Even if value buying is recommended, it should be done with caution in small parts.
Okay. And Sudeep, do it with caution in small parts. I get your point. What's the take with regard to the Bank Nifty and the Nifty and some of the private banking names? We've seen large correction in at least those counters. Are those part of maybe the list that you start buying in small quantities?
Well, I think the RBI circular on that on the gross position being brought down to 100 million created a lot of confusion. At least amongst the analyst community and the investors. Everybody was trying to gauge what is the kind of loss some of these banks will have to book, and I think there was a bit of a panic. But things are probably much less worse than what was being envisaged. So the worry is not on account of this particular unwinding of forex trade, but the worry is bigger. Worry is economy slowing down. Worry is credit demand coming down, and worry eventually will be asset quality. So under these circumstances, it is again better to be careful. But assuming you are a bit aggressive investor and you want to build a portfolio, yes, some of the large banks can be bought very, very slowly. I would say maybe a SIP-like structure you can evolve for buying into let's say an SBI or even an ICICI Bank.
Interesting that HDFC Bank, Sudeep, is not part of the list.
Well, I think it would have and could have, but at this stage, I think there are still some uncertainties. And performance-wise, also, we do like ICICI over HDFC at this stage.
Fair point. SBI, ICICI Bank looking like the safer bets right now to start nibbling in. But Ruchit, come in on the charts within private banks, other than, of course, HDFC Bank and ICICI, Kotak. Anything that you're liking which becomes a good buy right now, you think?
Not really. In fact, I would wait for the trend reversal to happen because, if you look at the entire private sector banking space, we have seen this price correction which has been supported by, high volumes. And generally, when we see such volume-based selling, the sector tend to underperform. So I would believe that one should not mind, getting into long positions a bit expensive, but at least there should be some trend reversal, on the charts rather than catching a falling knife.
Curious to know what you make of the VIX, because that too has been one of those choppy elements in the market. At what point do you expect that to top out? Direction? What is it indicating at this point? Give us some color.
So if you look at the historical data, then usually whenever there are sharp corrections, VIX tends to top out in the range of 30 to 35. Only when the bear market is very large, such as what we saw in 2008 or 2000 dot-com bubble, the VIX reached that, or even 2020 COVID bottom, VIX reached that high of 60s or 70s. Apart from that, whenever there have been such even bigger corrections, we have seen VIX going towards 30-35 range and cooling off from there. So I think we are almost near to that 30 to 35 range. So we would see some sort of resistance coming in for VIX in this 30-35 range, and we should expect some sort of cool off from this range.
Okay, that's the take right now on the market. Let's take a very quick break. Haven't seen any signs of an improvement other than those first few minutes when we opened for trade. We're down a good 2% right now, and we've slid about 450 points as we speak right now. So unless some magic happens in the last half hour, this is going to be another rough Monday for us. We'll take a break, continue tracking markets on the other side.
The index itself is down over 4% in trade. So you're clearly seeing pressure visible across the board, but more so within that pack. The PSU banking pack is where some of the pressure is playing out. I'm also curious to quickly pull out the constituents of the Nifty IT index, because some of the names, especially in mid-cap IT, have also seen a bit of pressure, and Emphasis, for example, is down 3.25% plus. Oracle Financial is the other one. Coforge is down to 2.5%. So that pack also facing some heat of a very, very low base, mind you. And therefore, to continue to see that kind of pressure, despite the INR USD trading where it is at 95, I'll be very curious to also see what the impact of that INR depreciation is on the numbers of some of those companies. Sudeep, do you believe that positive tailwind, at least on the currency, should actually help some of the IT companies, even though the concerns largely emanating from the AI trade? But do you believe that just the near term, the currency depreciation, Q4 should be extremely strong?
Yeah, I mean, obviously they will benefit because of the currency depreciation. Most of the frontline IT companies, they have 50% plus earnings coming from US itself. And some of them have about 70% earnings coming from global markets. So obviously the sharp depreciation of the currency, Indian currency, which we have seen in the last few months, will help these guys definitely. So they will have a positive impact on the current quarter's P&L. But of course, as you rightly said, this is not a long-term sustainable business model. So they have to evolve. They have to evolve very fast in this new emerging AI world. And the sooner they do it, the better it is for them. Yes, as far as short-term blip, short-term push is concerned, they will get it because of the currency depreciation.
Ruchit, let me come to you with regard to some of the PSU banks, and let me just quickly cull out the 1 month returns on some of those names. UCO Bank is down now 25% after today's fall that we've seen over the last 1 month. Bank of Baroda down 24%, PNB down 23%, Bank of India down 23%, Canara Bank down 22%, Central Bank down 22%, Punjab and Sindh Bank down 21%. The list can just keep going on. And these are, of course, some of the other names. SBI itself is down 19% over the last 1 month or so. Ruchit, how do you play the PSU banks? Good opportunity to buy, maybe from a medium term, if not from a short term perspective?
I think this correction clearly is more deeper only because we had also seen a good outperformance compared to other sectors when the trend was positive. Nifty PSU Bank Index rally started the uptrend from 6,500, 6,600 kind of range when it bottomed out in the month of August 2025. And from that 6,000 levels, almost it tested that 10,000 levels in February 2026, which was just a span of about 7 to 8 months. So I think because of that kind of relative outperformance in this correction, since the broader markets have seen a sharp down move, this is unwinding of that long positions along with the fresh short formations which we have seen. Now, the Nifty PSU Bank Index today has also breached its 200-day EMA. So generally, we see that whenever it's a correction within an uptrend, either the 50 or the 200 EMA should get protected, and we should not see the index breaching that level, which has been breached. So I think one should not be in a hurry. We have seen such kind of rallies getting prolonged, or the corrections getting prolonged in many other sectors previously well, such as you see railways when it topped out. I think it's almost 1.5 years. We have not seen any kind of bottoming signs. Defense as a space, it's been into a corrective phase since more than a year now. So I think in the past we have seen such occasions where the entire outperformance has been given up. So for PSU banks, I think one should not be in a hurry to do any kind of bottom fishing over here. Maybe let's wait for any kind of reversal signs and see whether the leadership would again come from any of the heavyweights like SBI.
Interesting. Let's
from Relicare Broking joining us. He's, of course, technical analyst there. Ajit, how are you looking at the markets? What are you seeing in terms of charts? Anything that's standing out?
So, good afternoon. So, see, one thing which is clear that we are ending the month, the expiry, all on the, weak note that we are at the week's low as well. So what this indicates is that the kind of recovery or rebound that we were experiencing, all this has fizzled out. And now with break below 22,500 mark, the next major supports comes around the long-term moving averages on the weekly chart, which coincides with 200 days of weekly exponential moving average around 21,900, 22,000 zone. So the overall texture looks negative. Banking, which is among the laggard in today's trade, is likely to also extend this decline towards 48,800 marks. So broadly, the texture looks negative, considering that it's a holiday shortened week also. So the prudent approach is to focus more on hedging your existing position instead of looking for long trades in current market scenario.
Yeah, interesting. That's the strategy right now that you're seeing on the Nifty alone. But yes, we're closing in pretty much at the session lows, and this one being such a truncated week with just 3 trading days is really not helping sentiment either. Look at Interglobe. In the last few odd minutes, it's tumbled even further. It's down about a good 4.5% as we speak right now. While, of course, metals continue to be the saving grace today, along with names like ONGC for sure. And DMART, quite interestingly, has suddenly shot up. It's up a good 1.5% as we speak right now. But Ajit, the entire metals trade, does it seem like it's going to bounce up from here? And could it be a one-way move up?
Three sectors largely that some of the pharma names, some of the energy counters, and selectively from the metal pack are the pockets basically where we see strength. But are we going to sustain those gains is something a bit difficult, because in the past also we have seen that when the market breaks its important supports, then usually the other counters or the sectors also pitch in on rotational basis. So as of now, yes, selective counters from the metal pack look upbeat. So stock like National Aluminium, Tata Steel, SAIL, they are holding strong. But at the same time, we have majority of the names in the metal pack also which are reeling under pressure. So selective approach can be considered, but since the overall tone is negative, one should not get carried away, and keep the position size in check is something that we recommend.
Okay. Sudeep, the Nifty Bank, it's down 4% now, or nearly 4% now. Would you at all look at the banking index or any of the constituents there, or even within the broader banking universe, on the smaller PSU banks? Is this something that you would actively look at, and what are the levels that you would look for when you're looking at some of these names?
Well, I think it's one has to be careful, Harsh, as I've been saying. I think we don't know the direction and the duration of the war. It's absolutely uncertain, and the risk-off mode is really on. We've been witnessing it for some time, and I think it's getting more and more intense. So under the circumstances, banks will find it difficult to move up. So I will advise exercising caution. It's always better to focus on metals at this stage, particularly metals where there is demand and existing supplies are getting stuck. Like in aluminium, there are a lot of disturbances in the aluminium supply chain, with about 10% aluminium coming from the Gulf, West Asia, getting disrupted. The aluminium prices are high. So it's better to focus on these things rather than banks. But if one has to really pick up banks, I would rather go to large cap leading banks like an ICICI and SBI. I don't think the time is right to look at the smaller banks. Not at this stage. Some of the other NBFCs definitely do look oversold. There has been a huge amount of selling in Bajaj Finance as well as Shriram Finance. So they do look they will probably start looking good after some time. Still not the time to start picking up. I do like the gold loan finance companies, Muthoot, Manappuram, both. But again, considering what's happening in the global markets, time is not right. But I will be advising keeping a watch. And as and when things start stabilizing, it may be worthwhile slowly accumulating.
Interesting. Sudeep, what are you making of this entire metals trade? Because when the war did break out with the rest of the market, metals too fell weak, and now suddenly you are seeing metals as a sector prop up.
Well, I think a couple of things are happening, Aisha. One is particularly aluminium. There is about 10% of world aluminium supply comes from West Asia. Now, there are disturbances. Refineries have been shut down. Production is affected. Supply chains have been disrupted. So obviously, aluminium already there was a demand-supply gap. Now that will get accentuated. Under the circumstances, the aluminium manufacturers who particularly have captive mines are worth looking at. So in Nalco, definitely worth looking at. Vedanta, for multiple reasons, including the aluminum business of theirs, do look good. Hindalco, yes, except that their US business underwent a lot of unfortunate incidents, including a fire. So I'm a bit cautious of Hindalco, but Nalco and Vedanta definitely do look good. As far as oil companies are concerned, obviously, this kind of crisis has led to oil prices shooting up. So obviously, the ONGC price moving up is understandable. Of course, one has to remember that this is going to remain extremely volatile. So if you are buying into some of these oil manufacturers, be extremely careful, have strict stop losses. But aluminum is going to be steady, stable trade for the next couple of years. One can also look at some of the other metal companies because we believe, before all this geopolitical disturbances, we believe that there is a time for a secular bull run in metals. We continue to maintain that thesis even at this stage. So some of the other metal companies, miscellaneous metal companies, also can be looked at, like a Mishra Dhatu Nigam Limited can be looked at, GMDC can be looked at. Rare earth and other things are going to remain in demand, and they are definitely precious. So companies able to mine them or use them will be in demand, and their prices will continue to give benefits to the investors.
Okay. Ajit, any metal counters on your radar? Also, very curious to know what's the view with regard to a Vedanta?
So National Aluminum, Harsh, is something that is not only showing strength. It means if you see that during the corrective phase also, it was holding considerably closer to its short-term averages, so which shows that the overall strength is there. Then it's more of like, a time-based correction that the stock is experiencing, because we are very close to the record highs as well. So this gives us comfort that even if, let's say, the stock goes for sideways, correction in the near future, considering the overall pressure that we are experiencing in the markets, the outperformance is likely to continue in the coming weeks as well. So here one can look for accumulation opportunity in this range of 380 to 370 with the closing stop at 360, and gradually the stock can inch towards its record highs zone close to around 410, 420. Vedanta, after the initial uptick, we are again seeing selling pressure, means the stock is definitely holding strong in comparison to the majority of the metal names. But sustainability is required, let's say, above 680 mark for any decisive uptrend or a recovery towards 720, 740 area, the previous swing highs. So as of now, it looks okay, but for any meaningful up move, we need a sustainability above 670 mark.
With today's day, we also close in on the financial year FY26. And while year, how are you viewing the opportunity in defense now?
I think opportunity definitely is there, and I think opportunity will continue to remain for the foreseeable future with what's happening on the geopolitical front. But I'll be, as usual, cautious on the valuation of some of these defense names. And in spite of, bright future and great order book, I think the valuations continues to look stretched in many cases, and I'll be a bit cautious. If I have to look for defense opportunities, probably I will look in the, take the case of the Larsen & Toubro. It's got a fantastic defense business and it's growing. Take Bharat Forge. It's got a defense business and they are growing the defense business rapidly. So maybe I'll look at these pockets because the valuation there post all this correction has become really attractive. Of course, Larsen & Toubro has its own West Asia challenges. But if you are an aggressive investor and believe that these challenges are going to, go away in some time, I don't know whether it's weeks or months, I think L&T is a very good bet at current levels.
Okay, L&T being that bet. Ajit, how does L&T look like on charts?
So Harsh, after this recent correction, means the stock was anyways hovering in a very broader range. Means if you see that from the month of April 2024 to till date, the broader range is 3,000 to 3,900. Off late, we were seeing that the stock made an attempt of a breakout. In fact, it was sustaining above 4,000, 4,200 levels for few weeks as well. but we have re-entered into that zone again. So it seems like that consolidation or time-wise correction might happen after this, failed attempt of a breakout from this broader consolidation range, and with 3200, 3800 being the broader range, at least in the near future. So in case if somebody is accumulating the stock, they can continue to do so. Means in case if there will be any further dip towards, let's say, 3200 mark, it's a very good buy from medium to long term perspective. And around 3800, 4000 zone, one can look for booking profits or exiting opportunity in case if they wish short term.
Okay, thank you so much for that. We'll let Sudeep go. Ajit, we'll request you to wait back.
Parameters are really helping the cause, and of course financial year close compulsions as well perhaps. But Ajit, how is it looking like for what levels do you see support coming in at next?
So Aisha, despite oversold position, means we are at multi-month lows. We are about to test the long-term moving averages on the weekly chart around 21,900, 22,000 levels. Still, we are not seeing any decisive sign of recovery or reversal. In fact, just to highlight that a couple of days ago, we were seeing that the crude declined after testing $119 mark to 93, and market was celebrating with 3 days of rebound, 2 days of rebound in between. But the India VIX was holding strong around 24, 25 mark even during that time, and it has now inching higher towards the 31 mark, usually the area where we have peaked twice in the recent past. So maybe we are very close to the bottom, considering that the mean reversion can also play out after this sharp decline in the index. But since the tone is negative, one should not jump into a trade in hopes and anticipation of a recovery until markets form some base, show some decisive sign of rebound, and crude also slips below this $100 mark and sustains.
Okay, Ajit, we'll let you go as well. Thank you so much for joining us, giving us all of those views. And viewers, that's in fact all the time we have on Closing Trades today. From Aisha, myself, everyone who puts this show together, thank you so much. Hopefully, the next financial year, Aisha, turns out to be a much better one than what we've seen. It's been a tumultuous one, but we've closed this financial year, of course, and we'll see you on the other side on the 1st of April, of course. Thank you so much for tuning in and being with us.